What is an institutional operator? An institutional operator is a operator that manages apartments, mobile home parks, or office space or commercial retail. Again, this is the operator we're talking about. I consider myself more of a middle market operator where we've been around, we've done deals, we went full cycle on some properties, but we haven't been around for decades. A lot of investors always ask, I want to work with an operator that has been around since 2008. And I'll be honest, especially in the apartment investing world, you're not going to find them. I've tried to look for them. They're not out there because they have been around since 2008. What they've been doing slowly is swimming upstream so they don't work with small private equity guys that are $1 million, a few $1 million net worth, putting in 50 to $200,000 chunks. They're swimming upstream so they can eventually grow into a large REITs so that they can extract more fees and better profit splits for themselves. So going back to ourselves, I'm the principal of the company. I'm typically the one making management decisions, interacting with third-party property managers, or maybe we have them in-house. I don't have, maybe likely one day we'll have an investor relations staff, but we don't have all these operational staff like a manager of operations Texas, or director of operations Alabama, for example. I'm the guy. And I think that's why a lot of people like investing because we're not small, we're not new, but we're not also large and big and clunky. The reason why people like to work with middle market operators and why I, as an LP, like to invest with middle market operators because when you start to go to the institutional operators, they charge very heavy fees. Acquisition fees are typically over 3 to 4%, which is crazy to me. Remember, you have to add up all loan fee, guarantor fee, all these other fees. They're all acquisition fees. They're all just tricky ways to make you think that the acquisition fee is lower than it is. So in addition to the fees, you also have worse splits for passive investors and not necessarily saying that an 80-20 split is good or bad. The operator is going to take more as they become more institutional and as their cost of capital gets cheaper from their perspective. So as an investor, you want to get a good blend of both, especially when your net worth is lower than a few $1 million, you got to grow your money. You can't just invest with institutional operators, in my opinion. But institutional operators have been around the block, possibly 5, 10, 15, 20 years in some cases. And they have large bloated staff a lot of times. A lot of operators, and you'll see a lot of these companies where they have to continually do deals just to get acquisition fees, just to get that 3-4% of big money to come into the office so they can pay their office staff and keep the lights on. I don't want to run a business like that where I need to continue to do deals just to do deals, just to pay my staff. But a lot of these companies have created this type of infrastructure where that's how they need to do it. So some of my more higher end clients, the guys that are over a few $1 million net worth, I may suggest to go and work with some institutional operators in certain asset classes. But for a lot of us that are under that, it may not make sense from a rewards perspective. What you definitely don't want to be doing is working with a newbie operator. And you guys know who I'm talking about. We talk about a lot of time. These are the guys who just created a podcast out of the blue because everybody can make podcasts these days. You just read a little script and in front of the microphone right here, and you got yourself a podcast. And now everybody is like a syndication expert these days. I'll tell you, creating a podcast, if you don't do it efficiently, there's no way in heck you can be the primary operator. So typically the guy on the mic is really the marketing side of the company. But what you're trying to do is you're trying to cut through the noise. Who are the people who are actually doing the work? And is this operator that I'm interacting with, are they truly more of an institutional operator? Or have they been around the block? Or are they a complete newbie? Telltales are guys still working their IT job and they do this apartment investing on the side, but they have great understanding of Upwork and Fiverr and how do you get a VA to do a nice little PDF pitch deck. And they have great presentation skills and they can put together a very concise webinar. So don't be fooled by all this. They could very well be very new. Just because they can put together a shiny presentation doesn't mean that they can operate or they have a track record. I'm all for people going after their dreams, but I don't want to be putting my 50 grand to be powering that. I want to see people be at least in a few deals, getting their track record going. And that's why I prefer to work with more middle of the range operators. I've said it a lot of times before. It's the same reason why I don't work with certain CPAs that charge their clients 10, 20, $30,000. Even though they might be fine and they do a really good job, I just don't think it's worth it. At the same time, I won't go to the low end and I won't work with like H&R Block or do TurboTax. It's just not good quality and you're not getting all the deductions. I work with value operators and value vendors, and that's just my brand. Is it a little more risky? Yeah, but I think the risks outweigh the reward and you get the better returns in the middle. It's very hard for passive investors to distinguish between complete newbies who are pretty nifty with making PDFs and presentations from those operators who have been around the block a little bit. That's why I stopped going to real estate meetups and different conferences these days, because I'm in this business. I'm a syndicator. I know all the little tricks and games they play. I know when they say something and it's complete nonsense. When they say it during a presentation, I make a list of these things. And still, I have a really hard time to trying to figure out who is legit. Again, the only way to do this is to work with pure passive investors and see who they've had a good experience with and go off of that. And that's why the appeal of working with more institutional operators, even though the returns are lower, the reliability is there.